Well, hello everyone. K Kim here from the Traders Club, and I thank you for tuning in. Last few weeks, I canceled the midweek update videos. So it's been about 2 weeks, 3 weeks since last time I analyzed the market, and that was up here March 18th. But anyway, so we'll talk about that. But before we get to it, I want to do a little quick announcement. Next week, I did have planned to do live midweek update, but that I have to cancel that. I do have important meeting that I have to attend next Wednesday, so I will not able to host live midweek update. But if you have not signed up for that, you can go ahead and sign up here on my website, twotradersclub.com. Go to free webinars, and you can sign up live midweek update events. And if you're curious of how I look on the webcam, you can come and make fun of me, and then you can go ahead and sign up for that and come and hang out with me every other Wednesdays right after market close. If I'm not busy on that day, or if I don't have important meetings to attend to, obviously next Wednesday we would have to cancel that one. But you sign up once for whole 2015 for every other Wednesday meetings. What I want to tell you about today is a memberships intro. I've been getting a lot of questions and stuff, regarding the premium membership that we offer here in the Traders Club on our market research products. And so on May 1st, 2015, on Friday, at 2 o'clock, just basically on the Central Time, so basically 1 hour before market close. So if you're Eastern Time, that would be 3 o'clock. If you're Pacific Time, that will be 12 at noon. If you're Mountain Time, it would be at 1 p.m. Basically 1 hour before market close on Friday, May 1st. If you sign up here using first and last name, email address, if you click on complete registration, it will remind you a day before the meeting, and then 1 hour before meeting starts, and you get a link to join. So if you're interested in our membership and how everything works, what our methodology is, and obviously you guys know that I don't do anything short term. So this is for some of you who wants to learn how to position trade, or just want to follow my trades and be informed, and if you wanna come, and I can tell you how everything works. And also for live attendees, or so for someone who register, I also will give you some special rates on that day. So if you like to sign up, or if you like to ask me questions about that, you can feel free to come to the live webinar on May 1st. And if you have questions now, you can go ahead and contact me with the questions, and I will assist you in that way. But anyway, so let's go ahead and look at S&P 500. Today we'll look at S&P 500, and we'll look at the Russell and mid caps. We're not going to go into every single indices, but we'll analyze the S&P 500. We'll look at the Russell 2000 and mid caps, and obviously we'll look at Tesla and Apple, and quickly we'll go through some of our positions that we're currently holding, which are Starbucks, Boston Scientific, Pfizer, and Toyota. There are just several that we're holding. There's so much more that we're currently holding, but I thought I'll share some of those, which I've been talking about last several midweek update videos. So S&P 500, basically, first we would have to look at. You can see, if we just kind of gauge is 100 SMA here, 100 SMA continues to kind of act as support here, and it has been compromised once. So once that 100 SMA has been compromised, the integrity of that 100 SMA was questionable at best. But when it came back down and started to respect again, then definitely it's the level to pay attention. And so 100 SMA continue to act as support there, here, and even last few weeks here will continue to act as support. If I just throw a Fibonacci real quick from up top here to down here, so I'm just kind of measuring this recent move right there. You can see we're right on that Fibonacci retracement zone. What it means is we are in the territory of higher low, right? So same thing. I mean, last time what I did for you guys back in like December, January, February, right? Do you remember? And I did exact same. We put a Fibonacci here, and we came down to that first level of Fibonacci retracement zone, and then that was a level we found support. And so today, a lot hasn't changed. I mean, since I was gone, since since last my video, which was March 18, sentiment of today, it really has not changed. We're still in the territory of a higher low, right? While with the well-established higher high, only thing really changed was now we have lower high in the minor term. We've seen that before, right? We've seen that lower high. What is a definition of a downtrend? Lower highs and lower lows. So looking at the minor term, do we have a lower low? We do not yet have a lower low, which means we're still not in complete downtrend yet. What we are doing is we're doing something very similar to what we did back in November and December and January and February, something like this. It's very interesting what's happening here. We got lower highs, or lower lows here rather. We got lower lows there as well. And then right now we're sitting just right on the resistance level. Kind of, last 2 days we're just kind of hanging out there. That might be some kind of a bull flag pattern in the very, very minor term. But because of the pressure from the lower highs here, I think at this point it's going to be 50-50. That is, it's going to resolve to the downside tomorrow or next few days, or to the upside, because for the fact that we do have certain selling pressure with the lower high there. So, I have to say at this point, benefit of doubt goes to buyers in the intermediate term and in the primary term. Again, everybody has a different interpretation on what intermediate term is and what primary term is. If you ask a day trader what intermediate term is, he will say a couple days, several days, right? If you ask me what intermediate term is, I'm talking about 3 to 6 months. If you ask me what minor term, what my minor term is, I'm talking about a month. Just keep that in mind when I use these terms, minor, intermediate, primary term. When I say primary term, I'm talking about years. All right. So anyway, so with that in mind, also if I just kind of go back here, this is what I call resuscitated rising uptrend channel support. What I mean by resuscitated, because that rising uptrend has been compromised, but then it resuscitated, it was reborn and started to respect that level as well. You can see this was support here, here, here. Very interesting to see that has been compromised once and starting to respect that again. It's pretty rare to see something like that happening, but it is happening, and we must respect it, right? So, I'll say this. In the minor term, I think below 211, 210 on Spider, below 210 and 211, I do think that it's going to be hectic for the buyers. We also do have resistance coming down here. So even if we get up tomorrow, some of these level is gonna be acting as resistance. If we pull back tomorrow, next few days, it's probably gonna come back down to that, that 100 SMA, that support level here, and retest the level. As long as the buyers hold this level of 203, 204, 205-ish, this level right here, I would have to say that benefit of doubt continues to go to the buyers in the intermediate term, pretty similar to back here when it was 198, 197. Do you guys remember all throughout December, January, and February, every time when I had to host midweek update, this was here Wednesday, here Wednesday, there. Go back and check it every time. And what I said was, as long as we're above this level, this is a territory, right, of higher low. And that became higher low when this cultivated that higher high. And I'll tell you the same thing today. As long as we stay above 203, 204, that is a territory of higher low. And if you can get back above 210, 211, it's going to get up and make new highs. I do think, though, we're probably not going to see a huge move, next to several months until summertime. But I do think that we're gonna kind of grind higher. You know what I mean? We'll kind of continue to digest and move. And you know what? That's actually not bad. That's not bad, because I think it would be concerning. This thing just goes straight up every day. I mean, that will be like true bubble-like symptom, right? I mean, obviously, a lot of people saying that this is massive bubble and all of that, but I think the stock market starts to realize that, after its move, what it's doing is, after a certain move, we get certain pullbacks. After a certain move, we get certain consolidation, digestion. So to be honest with you, in the intermediate term, it's been looking healthy, in my opinion. But I mean, obviously, when we do look at like that monthly chart, it does look concerning as far as like, is this another like huge, you know, bubble and then it's gonna like just roll back over like this? Hey, when that happens, we'll know about it. I'll let you know when we have a topping pattern. This thing is gonna take 6 months before this thing actually rolls over. It will let us know, but the price action will tell us it's gonna take 6 to 8 months before that topping pattern actually occur. We don't have that topping pattern, so don't worry about that at this moment, right? So like a monthly, when we look at a monthly chart, it seriously does, you know, it's concerning. But when I actually go and just, you know, look at this, you know, certain daily patterns, I think that, you know, it's been moving, you know, healthy, in a healthy way, because it's been digesting its gain. It's taking its time. It's not just like going crazy, like, oh my God, everybody buy, everybody get into the stock market, you're gonna be rich. It's not like that. There's still concern, there's still worries. I mean, yeah, I mean, fundamentally, you know, obviously, you know, with the energy sector, oil, you know, being very, very weak, will probably, you know, those sectors gonna have a bad report in first quarter earnings. I get that. And also, you know, with the dollar strength and dollar being so strong, a lot of companies are, you know, not able to, you know, achieve their earnings in the first quarter. So they might, it might hurt them in their earnings, and that might be bad as far as in this earnings season that we're gonna get into, right? But that doesn't mean that because of that fundamental value that this market is gonna completely roll over. Do you know what I'm saying here? So the price action has to substantiate everything, which means as long as the price action continues to hold certain level and continue to build and cultivate and establish higher lows and higher highs, we have to respect that we're in an uptrend in the intermediate and primary term. It is concerning in the minor term, yes. However, we're not in a downtrend yet. So I think, again, below 210, 211, watch that it's going to be a little bit hectic, and above 204, 203-ish, you know, I think that the buyers will continue to be buyers will be continue to be what's the word am I looking for? Control in the intermediate term there. So let me just quickly look at Russell here. Excuse me. Let's get a quick water. So it's very different scenario when we look at Russell 2000. Remember, I wrote an article late December 2014. I said, watch Russell. Russell is going to be maybe the key index for 2015, and Russell might become that leader again like 2013. And as of today, as of last few weeks and several weeks, leader became and continue to show off its leadership, right? It's different story in Russell. You can see we're still very strong, looking higher lows and higher highs here in the intermediate term and minor term. You know, like S&P 500 is pretty close to where 100 SMA is. You can see the Russell is far from that, right? And so Russell minor term bullish. You know, like S&P 500 in the minor term does look concerning with the lower high in place, but however on the Russell we don't have that. We're bullish in the minor term, we're bullish in the intermediate term, we're bullish in the primary term. So I'll suggest that continue to, you know, watch the Russell. Same thing in the mid caps here. Mid caps also look very, very strong. Looks bullish in the minor term and looks bullish in the intermediate term. We're above, well above 10. Well, we're just right on that, but we're above 1020 MA, far from 200 or 100 SMA there, with well, you know, established higher lows, higher highs. Looks bullish in the minor and intermediate and primary terms. So I think, you know, because where the S&P 500 is at, I think we might continue to see certain volatility below 210 and 211. So next few days, obviously, like I said earlier, you know, watch 208 here, and if we can get above, if we gap up tomorrow, hold above it for a few hours, I do think that possibly we can maybe get to about 210 here, but that 210 is probably going to act as resistance. If we fail below at 207, if we get below 207, then probably come back down to that 100 SMA, which is about 204-ish level and probably retest this level as support there. Let's go to Tesla here real quick. You know, obviously Tesla, we did have that, you know, we did get above this resistance. A lot of times people do not understand that just because we get above, we trade above the resistance does not mean that trend has been reversed. If we just go back here like this, when the resistance level like down here, do you see that? Resistance, the red line, resistance and resistance, correct? And then when this thing got above like that, right there, it got above the resistance right here, and we got above all the moving averages. We're riding that 100 SMA, riding that 50 MA, possibly that 50 MA flattening out. You could say the minor term higher lows, okay? This looks very bullish. Well, we're still in, as long as we're below this low right here, we're still in the territory of lower high. That's what I'm saying. Just because it gets above recent downtrend resistance does not mean that trend has been reversed. So you can see that we see a bullish day for about 4 days, and this thing tanked. What did you do then? You adjusted the resistance, didn't you? So what I'm saying is, if this thing, as long as this thing is below about 225, 230-ish level, we are below territory of lower high, which meaning this could go up here, and then if it rolls over like this, all we have to do is just a little bit of a justification. Did I just say that? I just made up the word. A justification is necessary. Anyway, so just adjust that downtrend resistance, and then there you go. There's a new downtrend resistance right here. There, close there, and then if this thing rolls over here. So what I'm saying is, you know what? It does kind of look bullish. I mean, it looks, for buyers, it might be hopeful at this point because we had a little bit of bullish run. But for me, though, I don't do anything short term. I do not want to be engaged with this below 227, really to 230. Even if you get above 230, does not mean that I'm going to go long blindly. What I'm going to do is I'll look, I'll watch, I'll see if I can find some strategy to use or the level that I can possibly go long there. I'm looking at daily chart door here, or these oscillators. I want to show. Let me bring this in right here. This is Tesla daily chart. You know what? Why is this so dark? I don't like the color being so dark on that histogram there. Let's make that lighter. Better. So if you're buyers here, I mean, there's a little bit of a good signal. You can see the RSI and MACD forming. This is what we call bullish divergence. It's not really super potent because there are a lot of these peaks and valleys. But it's bullish divergence nonetheless. So this could turn into something. This is a signal. This is insinuation that could turn into something. However, we need price action to substantiate this signal here. So this could possibly be bottoming. Possibly looking at the daily MACD there, but again, that's just this potential signal, potential insinuation that buyers are slowly coming in, but that needs to be substantiated by breaking above this lower high there. Until it gets above that, I do think that it's going to become hectic for the buyers. I'm still not initiating on Tesla. We closed all of our positions back here, and ever since then, I did not partake in this move. So I'll continue to stay away from that. Looking at Apple here quickly, I wouldn't spend too much time. We close most of our positions up here. I am holding marginal positions. We first enter here, and then we added there and closed some position there, and most of our position back up here, as I've documented in my blog. But right now, what it looks like is what we're doing is we're holding certain level. It's interesting because if I just move this like this, and then just make it right there, because that's exactly what I did. Do you remember when I was writing blog here? This is a potential level that we're right on that Fibonacci retracement zone, while coinciding with that 100 SMA. Very, very important level that buyers must protect this level for higher move, and it did that, right? So let me just move that Same scenario. It's exact. I mean, it's not exactly the same. But something I always say is history does repeat, not exactly in an exact way, but in a similar way, right? History does not repeat in the exact same way, but it does repeat in a similar way. So if I just do Fibonacci right here, you can see we're just kind of right on the first level of Fibonacci and kind of riding on that 50 MA. So it kind of looks like some kind of a bull pennant or something like that. But I have seen these, you know, patterns fail. So I wouldn't just think that just because we have certain symmetrical triangle that it's going to continue higher. I've seen them failing. So what I would say is if we lose to 122, I think we'll come back down to about 119, which is going to be very strong support because of that 100 SMA is residing at that level. I don't think Apple is going to go any lower than like, you know, lowest possible. I mean, any lower than like 190 or worst case scenario 115. Any lower than that, the market has to roll over for that to happen. But I think it's gonna, if we can stay above that, 122 is a good level to watch. You know, if we lose that, then maybe perhaps 119, worst case 115. But I don't think it's gonna go any lower than this. So if you're a long-term investor, you know, basically Apple's still very much buy or hold, right? I don't know about buying now, but at least hold. At this level there. So I think, you know, I'm going to start thinking about going long here above 128 or above 130. That's the level I'll be looking at, possibly, you know, re-engaging to Apple here. I'll go through these very, very quickly here. Starbucks looks great. I mean, obviously, we're still in an uptrend, you know, and we've been involved since 82, and you can see had a pretty good run. And we had that pretty solid higher high, and then it came down, you know, and we're just kind of hanging out here. We do have a minor term lower high, very, very minor term lower high. So I think if we can get back above 96, I think possibly we'll get back up to retest at 98. If we fail from the level, this could potentially be double top. But why worry about that now? Because we don't have that data. But we did reclaim that 10 EMA as of today. But I think next level to conquer is about 96.34. We can do that. I do think that it can continue higher. Great run so far. And it obviously is bullish in the intermediate term and primary term for sure. In the minor term, I would have to say bearish to neutral for the fact that that could be the level of resistance. So bearish to neutral on a minor term there, but still looks very, very good. Boston Scientific, we've been involved since 13 here back in late or mid December. We closed most of our positions up here, so we're just holding very marginal position. And I thought we had a great run here. When Boston Scientific moves, it moves very, very fast. And then it kind of gets into long consolidation. You can see you get a huge run, and then, you know, we get a maybe one consolidation. We get on one final move, and then whole year we did this. So I don't think the move is done. I do think that there could be a little bit more move, and then maybe a consolidation or some sort before another huge move there. But you know, we felt comfortable closing most of our positions here. If I see another opportunity, I do think that I want to add to Boston Scientific, but I think possibly we can get back to about 19 if we can clear, you know, 18, 15, hold above it for a few days there. Quickly, Pfizer. Pfizer, we've been involved since about 32-ish there, early January, and just kind of holding above. You can see minor term, intermediate term, we're on an uptrend. Minor term, kind of, you know, some kind of a pattern here. Can this pattern be a consolidation continuation? Yes. Can this be a topping pattern? Well, if we can break below that, this could possibly be some kind of a double top, but we're not there yet. So let's not worry about it until it gets there. But if we can able to get back above 35 or so, I do think that we might have another bullish run to maybe about 37. I think at that level, I'll be feeling pretty good to close about half of our positions. But looks, in my opinion, is holding up very, very well. Even with the recent volatility in the market, it's just really trying to hold up there. So I mean, I have to say it's a solid stock to hold currently. Toyota Motor, we've been involved in back in 125 here, late December. We did close 50% of our positions up here in our call positions, and currently holding half. But obviously you can see we have higher highs, higher lows still intact, which means we have intermediate minor term bullish uptrend. As long as we're cultivating higher lows and higher highs, we respect the uptrend. Nobody knows how long it's going to do that, right? And in, you know, until it gives us a certain reversal price action, we continue to respect and we continue to follow, right? So that's what I'm going to do on Toyota Motor. Looks good. We don't have any kind of a reversal pattern as of today, so I'll continue to hold this. So that's everything for me today. Again, next Wednesday, live midweek update event is canceled, but following week I will post another video. May 1st, please come out and ask me any questions regarding our market research, products and membership. Or if you have any questions regarding that, you can feel free to email me with that as well. If you have any questions or any comments or anything, you just want to talk about something, just feel free to use my blog to write your comments. I do not check my stock. I haven't checked StockTwits in 2 weeks. Twitter, I do check it time to time. I do not have any of those apps on my phone. It doesn't give me anything. I do not know about it. I don't want to know about it. So best way to get hold of me would be through my blog there, because I do get notification on my phone when someone leave me any comments. So I can't guarantee that I'll respond to you right away, but I promise you that I'll respond to you as soon as possible. Well, enjoy your evening. Spring is here. It's a little bit too chilly here in the Twin Cities, but it's been getting a bit better actually today's was a little bit chillier than I hoped. Hopefully this weekend will be a little bit better. So enjoy your evening, have a great night, and we'll talk not next week but week after that. If I see anything, I'll try to put out a blog or something like that, so I can get you guys informed as well. Have a good night.